Guys, two companies to report on today, Dollar General and Ulta Beauty. We're going to go over their earnings release. I love doing earnings releases. I don't pay attention to them, but they're fun to kind of check out. Guys, look at this. Dollar General reported earlier today, up 14% today. Here's what they reported. Revenue of $10.65 billion versus estimates of $10.61. Earnings per share of $1.28 versus 93 cents. They beat by 38%. That is why the stock is probably up so much today. Guys, it's incredible. I'm going to pull up the Dollar General earnings release because I want to see exactly what they talked about. It'll be important to look at same-store sales, and I'm sure they also guided a certain way. So let's go to investor relations. Let's go to their net sales increased 4.6%. Same-store sales up 2.5%. Operating profit increased 31.5%. Earnings per share up 43.8%. Wow. Guys, everything was huge. Everything was huge here. Man. Why? Now, this is the issue. I think this is a sign of a weakening economy and weakening consumer. We've been talking about this before. Lowe's, Target, Home Depot, those guys had same-store sales declines. Walmart, Dollar General, all the discount places saw an increase. That, to me, is a sign of a weaker consumer. Now, Dollar General is going to do very well in a weaker environment. So it's something to consider if you want to, I guess a lot of people would say if you want to hedge yourself a little bit, but I don't know. This is incredible. The net sales increase was driven by positive sales contributions from new stores and growth in same-store sales. Now remember, same-store sales means every company has a slightly different version, but it's basically, hey, the stores that have been around for like a year or longer, how are their sales? Because if a business could be declining, but if they open more and more locations, it can show growth. That's why same-store sales is an important metric to look at. You have to understand that. Man, that's incredible. Interest expense decreased 17.6%. Wow. Look at this. Total merchandise inventories were $6.7 billion versus $7.1 billion, a decrease of 8.2% on average per store basis. Less inventory. They're turning that inventory fast. And they declared a dividend of 59 cents per share. So what would that make the yield? 60 cents a share times 240. It'd basically be almost a 2% dividend yield. What are they doing now? About the same thing. All right. So market cap, $27 billion, $50 billion enterprise value, a lot of debt. That's basically the leases. We don't have many community members here voting on it, only 20. But they're hold, buy, strong buy. So overall, it's a hold with $111 intrinsic value. So not far off here. Oh, this is interesting. Look at this, guys. 10-year profit margin, 5.6%. 5-year profit margin, 5.09. 1-year profit margin, 2.86. Kind of surprised by that. Let me go see what their numbers show here. I hope they have their numbers here. I'm going to see what the profit margin was in the last quarter. Okay, that's balance sheet. Okay, so they had sales for the quarter ended $10.6 billion. Net income, 2.65% still. I wonder why their profit was so much higher in past years. That's something to look at. Man, look at this. So look at this here. 2.66, 2.4, 2.4. Sales are going up, profits going down. Look at sales have doubled since 2016, but profit is about the same. All right, so that's a big question I would ask. If I'm an investor, I'm like, hey, how are your sales double and your profits exactly the same? Because there weren't any other income expenses hits. Interest is up, but not, enough to make up the difference. Operating income is down. Why is operating income? Man, that's impressive. All right, guys, this is confusing to me, but let's see what analysts think about the profit levels here. Growing pretty steadily, 7%, 9.5%, 10.5%, 13%, 9%. So some good profit growth there. Revenue growth. Ready? Look at this one, 4.8, 4.2, 4, 4.2, 4.8. I wonder if they think revenue is going to grow 4 to 5% a year. All right, so what's the right price to pay? Let's go put it in our stock analyzer tool. Now, Dollar General here, the issue is this. Profit margin. Because look, declining. Now, free cash flow is still there. So maybe we just make all of this the same as free cash flow. I'm going to do this. I'm going to change this to 3, 4.5, and 6. I'm going to focus on free cash flow, which is good because it's interesting. Free cash flow, Tim, is actually way higher than profit margin, as we were talking about. 3, 5, and 7%. PE, I don't know why I did 13, 15, and 17. Oh, bad returns on okay returns on capital. That makes sense. 13, 15, 17. It's about the market average. Hit the analyze button. The stock's currently at 125. All right, I'm actually higher on my price than the community. I have a low price of 80, high price of 250, middle price of 150. And don't forget, guys, this current return includes the dividend. So I don't think there's enough juice for the squeeze here for me, but I mean, it doesn't seem egregiously overpriced. I just want to figure out why their profit's so much lower. Now, let's pull up Ulta. Let's see how they're doing. Now, guys, I own Ulta. Now, the stock has risen up quite a bit lately. Let's see what it's at today. Oh my God, it's up 4.5% after hours. Bleh. They reported $2.86 billion in sales, beating by 5% versus 2.71. And they reported $5.14 EPS versus $4.58, beating by 12%. Now, guys, this is a stock I was buying a lot lower, and it's run up. I don't know. I didn't even know it was this high until the other day. Somebody mentioned it to me. I'm like, no, you're wrong on Ulta's price. I could not care less about the price. I just buy good companies, stick onto them. Here's why I liked Ulta. I was buying it in the mid-3s. At the mid-3s, the price of free cash flow was like 14. Okay, it's now 25. People in our community have it as a hold. And I think that might make sense based on this intrinsic value. Profit margin is very steady, around 10%, a little bit higher. Gross margin, 39%. Women love it. They don't spend money on acquisitions, and they have great revenue growth. Great revenue growth. Net income's a little bit behind. Their free cash flow is a little bit behind net income. Not a ton, but a little bit behind. Man, poop on them. Let's go pull up their, I want to see what their same-store sales, Ulta Beauty earnings release. Let's see what their same-store sales growth was. That's really important. Let's check this out. Read more. Okay. Oh, look at that. Comparable sales increased 6.3%. Tim just said, ooh, that's huge. That's a big nut right there. Wow. Wowzer. Operating income up 10.8%. Wowza. They said our third quarter results exceeded expectations, reflecting the steady progress momentum our team is building as we execute our Ulta Beauty Unleashed strategy. The other day, my stepson was in town with all of us for Thanksgiving. We all got sick. We don't know if it was food poisoning. Well, it probably wasn't food poisoning, but anyhow, he brought his new girlfriend up from Dallas. They went back home. He got really sick at night. She took care of him, even though she had to work at like early in the morning. It was like 2:30 in the morning. She took him to the ER, etc. So the next day, I'm like, hey, we're going to get her a gift. What does she want? He said, Ulta Beauty gift card. I was like, yes, supporting the team because obviously we have shares. And my wife's like, oh, let's get her something different. I'm like, no, we're going to buy her an Ulta Beauty gift card. So Ulta Beauty, you're welcome. That was my Ulta Beauty story. But I was like, I literally looked at it and said, I own shares in this company. We're buying an Ulta Beauty gift card. We're going to say, Tim, put it in the microphone.
Do women prefer going in person versus online to stores like that?
That's a good question. And you know what? Let's have people answer that. Your girlfriends and wives, because the vast majority of our viewers, if there are any viewers out here who are women, do you like going into the store or do you want to buy online? I think the stores are beautiful. You know that Home Goods over in Warrensville Heights at Richmond and Harvard. There's that Home Goods there, which Lisa loves going to. And whenever she goes in there, I go into Ulta Beauty just to see. And it feels so like welcoming and nice. And I'm like, oh, and then down in Dallas where Daniel lives, there's an Ulta Beauty like minutes from his house. There's a Dick's Sporting Goods there. So I'll walk into that because I think Dick's is a great store. I love walking through. I love them. So guys, comment below on your wives and girlfriends about what they like to do. Big growth in selling and SG&A expenses. Selling general administrative expenses increased 23%. That's a lot. But gross profit increased 14.9%. Oh, and look at this. Remember that gross profit number? They surpassed 40%, 40.4. Good. And it's not even the busy time of year yet. Now they're going to the busy time of year. That's incredible. Okay. So Almost an 8-pillar thriller, that free cash flow number. But remember, the stock is up a lot. Keep in mind, guys, if I bought the stock in the mid 300s and it's run up to 5 something, a lot of people out there, speculators, will say, oh, I made a lot of money in this, I should buy more. I look at going, it might necessarily be as good anymore, but that's what we're here to analyze. Is it still a good buy? So let's go to Stock Analyzer. Let's pull up Ulta. Okay. I did very low revenue. Let's go back to analyst estimates. Did I do this yet? I did not do this yet. Analyst estimates. Earnings per share, 2%, 10%, 10%, 11%, 14% EPS growth. Okay. Revenue growth, 7.5575. Okay. That's analyst think. Let's go to Stock Analyzer. I will do this, 3, 5, and 7%. Profit margin and free cash flow. I'm going to put 9.5, 10 and a quarter, 11. PE, 15, 18, and 21. So I gave it a premium, but I also pulled it back a little bit. But I will say this, it is a quality business. 17, 20, 23. 17, 19, and 21. This is what makes investing in art here, guys. I hit the analyze button. The stock is currently at 534. Do you see why I loved it at 350? Low price of 400, high price of 730. The story has changed. Even though it's a green, it's only 9.3% discounted return. Guys, at some point I just got to go, hey, don't look at a stock as if it goes up, that's the reason to buy. If it goes down, a reason to sell. You're buying a piece of a business. If the stock went up 10x and you're still buying it, you're not paying attention to fundamentals. So guys, if you like these kind of things we do me a favor, subscribe to the channel. We do a lot of these videos, 20 to 30 a month. We really love doing it here. So subscribe, watch our videos. You'll learn a lot. Thank you for your time.